This is Lowe's on the monthly chart, and what you can see is that Lowe's broke out in recent months to the upside out of this huge sideways price action. Typically on a breakout you get a retest before the continuation, in this case higher. Now Lowe's recently announced earnings, so let's get into the article. And this article is coming from Market Beat. Small projects, digital tools help frame the outlook for Lowe's. So shares of Lowe's stock was up over 3% in earlier trading after the home improvement retailer posted mixed earnings results. On the earnings call, management noted that consumers taking on small projects helped offset the macro headwinds, causing them to hold off on larger projects. So their earnings came out this past Wednesday, and the consensus was very similar to Home Depot. In the report, the company also acknowledged that consumers were decreasing their discretionary spending on larger projects. Lowe's CEO Marvin Ellison said the results were due in part to the company's investments in its total home strategy. The CEO said on the earnings release, "Our ability to reduce expenses while improving customer service is the result of excellent execution by our team." The company also cited its continued transition to an omni-channel experience, including growth in its buy now, pick up at the store service as the key drivers of its performance. Moving forward, the company sees continued targeted investment in digital projects as being key to rising its operating margins and managing through what continues to be an unclear macroeconomic environment in 2023. Now, for the specifics of the results this past earnings, let's look at this quick video coming from Yahoo.
We continue to track shares of Lowe's today. Right now, they're up more than 3.5% after the company's results came in mixed. They fell slightly short of expected sales on lower DIY demand. The company, though, did stick by its full-year forecast, having already predicted that sales will slow this year as pandemic-era demand cools. Lowe's outlook for the year echoes that of rival Home Depot, both bracing for a slowdown in home improvement. And we should say Lowe's comp sales fell, but not as much as estimated. Joining us now is Max Rocklenko, TD Cowen director, on these Lowe's numbers. What stood out to you from Lowe's in terms of execution here, maybe that helped it edge out the estimates, considering that the macro environment is a little dicey right now?
Yeah, thanks a lot for having me on this morning. Lowe's had good numbers. Overall, they were better than expected, both with same-store sales coming in ahead, down 1.6%. But better than what ourselves and others modeled, as well as EBIT margin, which also did quite well. The company, to your point, did reiterate guidance, so all these things are positives, and the stock is reacting nicely. Overall, the company is doing a really nice job of executing in a very mixed to tough backdrop. You mentioned that the pro environment remains better than DIY, and we are seeing pro continue to outperform.
So what does this spell out for where the company is going to be able to also maintain margins? They talked a little bit about that and what they were doing and trying to reduce expenses and making sure that they're not kind of missing out on just driving a good customer experience. But at the same time, investors want to hear about the margins. And even in an environment like this where there is a macro concern, still securitizing some of those margins top of mind.
Yeah, management has done a great job over the last handful of years of really improving operations, both at the store level as well as HQ. They're well on their way, but we still think that they have several years more to go. They previously would underinvest at times in some of their stores, some of the IT, and these are some of the major areas where they've been investing. And we are seeing an improvement in margins. Gross margin did quite well, and we're excited about some of the other initiatives that they've got going, which we think are going to help margins in the back half of the year.
When it comes to the pro business at Lowe's, they seem to have done a little bit better in contrast with what we heard from Home Depot. What do you think is going on there?
Sure. So Lowe's has done a really nice job with the pro business for the last several years. They're really looking to take market share with the smaller pros, whereas at this point, Home Depot and their initiatives are really focused on those large and much more complex pros. So Lowe's is doing a really nice job But at the end of the day, their pro business today does remain roughly 25% of mix versus Home Depot that's at about 50%. So Lowe's is doing well, but the size of the business today does remain much smaller than where Home Depot is.
Looking ahead to the second half, Lowe's is guiding its revenue at the lower end of its guidance. It expects tough year-over-year comparisons in the quarter coming. One reason is that it doesn't expect to get the seasonal benefit it received in the second quarter when a late spring helped pull some lawn and garden sales into the second quarter. All right, so let's get back to the charts. And we're going to scroll down to the weekly chart. And again, you have the leg out of the sideways price action. You have a pullback. I'm looking at this area here. As a potential area to get long. So what I see is you got a rally, a basing candle, and then a rally out, a close above the pivot highs, and the continuation before price is pulling back. Now what you can see is price nearly came into that zone. We're going to say that is weekly buyers at 213. So pullback, if price declines, this area is valid. Setup will be the following. Look for a first target at the previous local high. Price can close above that level. This becomes a target here at the 140 level, where you have resistance as evidenced by these wicks. That's the setup. Let's see what happens over the coming months. Thanks for watching. Subscribe. Please like the video.